Welcome everyone to the Kendall Report, Monday night. This week is going to go quick, I'm sure, just because I have so much going on. Just remember, next week, no YouTube videos. I'm trying to put a plan together maybe to do a couple updates. We'll just see how it happens. I'm going to be upside down literally from the time zone. So anyway, let's get into markets today. Was interesting. If you paid attention last night, folks, we bounced right off of that 10-period moving average, S3. We traded all the way up to R1. It was a perfect trading day. I sure hope some of you caught this thing. It was perfect. The algos were spot on. We did get kind of a mini bottom for a moment till about 5 a.m. New York time is when the selling came in. So we came in really, really weak once all the New York folks started to come in, and off we go from there, right? So interesting day, though. We bounced off of STX on the NASDAQ, and on the futures, we were right at almost on the money. And then we saw a nice bounce off of S3 and off that 10-period moving average. I told you that, and I'll show you here in the technicals here in a few minutes, this 10-period moving average, the trends right now are about as perfect as they get. And I named this video tonight, The Markets Climb the Wall of Worry, because think about everything that's out there. You've got the leaked papers out there about the war. You've got, they're still playing the bank game a little bit. I see even people commenting about, why is JP Morgan selling bonds? Why not? Why not? Yeah, I mean, everybody, you get to, one of the things that just like you folks get to do, you get to rebalance your portfolio, you get to reposition for what you think's happening. And that's what the banks are going to do. And if they think there's some risk, then they're going to mitigate the risk by changing that. Those of you that have been watching the channel know for a while that I was a consultant to about 36 banks during the mid to late 90s. That's what I did for a living. And, this is just really typical stuff. I know all of a sudden everybody's focused on the banks. Everybody's an expert, and everything that goes on in the banks now is a potential disaster. And when we were going through the so-called, I'm going to go air quote, crisis, there were some banks that obviously got in trouble, got transferred around, but it wasn't systemic. And that was my argument right away. And we continue to see these markets just kind of firm up. I'm going to tell you tonight, I'm going to be able to blast through tonight's video because there is literally nothing coming out tomorrow, virtually nothing to talk about other than moving into the reports that are coming out midweek with CPI and PPI. That's where everything's going to be focused. I'm not sure there's going to be a lot of movement. The only thing that's really moving right now is Bitcoin, up $1,600, printing almost 30,000. Pretty impressive. We'll have to go through that. I've been talking about how the uptrend is going to hold. I didn't talk very well about what was the upside potential here, and this is a pretty impressive rally if you think about it. All the way from Jim Cramer at 15,000, claiming that we're going to zero, it's been straight up, right? So it's been a really amazing trade there from that standpoint. So I'll go through all those details here in just a minute. So a couple things here. I don't have a lot of notes here. Economically, there's the NFIB, which is the Business Optimized Index. I'll get that out. And who cares? So nothing's coming out. I think I've pretty much covered everything on here. One of the things to focus on, we continue to see, it's interesting what's moving right now in the markets. Industrials are up 0.9, energy up 0.7, materials up 0.5. And, all of those people telling you about this coming recession and that, I can't find any metrics that are telling me there's going to be a recession. As I made the comment last year was the recession, the 2 quarters we had negative last year. And for whatever reason, this thing just keeps rotating and it's positive. You saw the numbers we had come out of the employment report. Nothing seems to be able to go south in employment. It's just very, very solid. And it's just got to be baffling the Fed because I think they'd like to knock it down. But it's kind of interesting. We were talking gas prices last night. They've already punched things up over $4 again here. So it's almost like these distributors. It's a regional distributor that's right behind my office here, and that is kind of interesting because it seems like they watch the news, and the second they can raise prices, they do. There's no way that stuff filtered through the system in a couple of days from Monday on, last Monday on, right? It's just not happening. But they are quick to raise them and slow to bring them down, as we know. Just looking at my all my comments here, don't really see anything else. Let's get into the rest of the video tonight, and we should be able to get out of here pretty quick. Let's see if we can be fairly efficient. All right, so here we are hanging right around this 42% level. We had 649 buys, 156 sell signals, so we still got a positive rotation going on here. On both sides, we got bullish rotations on model 1.2 and 3.2. I do believe that we'll continue to see this market really start to climb just a bit more as we come in through this week. I think it's possible that very soon we'll see 48+% bullish on the database. I won't cover it tonight, but we did see the intermediate database, punch all the way up to just at 62%. So everything is really positive here, folks. It's not necessarily super bull, but there is a trend that's unfolding. And I went through a lot of the forward-looking scenarios last night. There's, like I said, there's not a lot here. We're still getting some slight positive traction, and I would like to see, right now we're at 6560 long, so 6,560 symbols long. On the intermediate, we're about 9,500. So we are pushing the market's pretty good. And the intermediate, as I went through last night, is that forward-looking expectations there are pretty substantial. Let's go ahead and get into technicals and see what happens there. All right, we'll start with the hourly as usual. It looks like we're trying to top out a little bit here. We do have some support at the 10-period moving average right now. We're looking at that at 41.32 is good support. We look at the PPMs. We got a plus 0.79 on PPM 1. It looks like it's going to fade off, but we should climb up. You can see the projection here for the 10-period moving average and how the averages are unfolding here on the hourly. So we should see support. It'll be rising as we go through, and possibly as we get toward the magic hour where the London is opening up, we might finally get to a point where maybe we can break down a little bit, but there's really, really good support around 31.32 and down to 39.24. So 41.24. Let's go to the market grid here just to get a feel for this. I mentioned, let's review yesterday. Yesterday, we look at the 4,098. We did print down. I was looking at the trading view numbers are slightly different. These numbers today, we're looking at, so far we've had a 44 high. R1's 48. I think there's a possibility that we print R2 today, 41.57, S1 30. So that's pretty much what's happening. We still have a very narrow volatility range that's happening here. So we could see S2 R2 actually, which would be a 41.21 with a 57 print high. I think there's going to be a slight bias to the upside here, at least for today, probably coming into Wednesday's numbers. We'll see how that all unfolds. Let's go back to Trading View here, and let's go to the daily just to take a look at these numbers. I think it's interesting because this is the angle of attack. You can see this quite clearly here on these averages, and I talk about, I used to draw these in. It's nice to have the predictive SMAs. Yes, they will be available. Like I said, it's probably going to be next month, mainly because I'm going to be out of town. There's a lot of other things going on. But we're looking here at these upward slope. Yesterday, as I mentioned, the 10-period moving average yesterday was at 4095.22. The low yesterday was at 4098.75. And if we look at the market grid right here on the trading view, we had a S3 low of 4098.50. So we printed right to that S3. R1 was 41.42, and the high yesterday was 41.44.50. So it was perfect. It kind of started off hot overnight. It faded into that low off the open, and I've been telling you folks about this situation for a while, but there is like great little reversal trades off of around London. If you're trading up into London, you get a reversal down, usually lasts for an hour or so. Early in the morning, these reversals have been happening on the S&P as well. This morning, we had basically it printed a low, it spiked up, reversed down, made a slight new low, did not, I think it was just one tick off of the previous day's low and just reversed. It was a steady bid. All of a sudden, we were 41.05, 10, 15, and we traded all the way up to, as I said, 40. And that was done after that bounce there. So this angle of attack I've been teaching you folks about for years, you can now see what the angle is. And these are the trend lines that are likely to be followed. And I've argued against trend lines for a long time. You could draw a trend line in here. Maybe it would be the same as the average. I just like numbers that are being generated by the markets. And you know, that is the key element here is that angle. And like I said, it's not this big, robust parabolic curve, but it's very steady. We have a position that went on the logic on the buy signals at 4,008. That's still long. And, here we are at 41.40. Last trade, 41.40.41 here. That we should stay above this 10-period moving average. Again, that's going to be your mark to watch for. That's 4108.62 now. And I think if we look at the market grid numbers here on here, we're going to look at S3 4105.75. I told you we could print S2 R2, which is 56 on and then 16 on the downside. So make sure you're watching for these numbers. We should continue to bounce. Keep a bias, like I've been telling you. There's a bias to the upside here. How many more days will this last? I think potentially throughout the week we could see a basic upside bias all the way. I don't see us penetrating down below here. It looks like maybe Thursday there's some chance for us to pull back, but ultimately you're going to want to be long this thing against the 21 SMA. That's going to be your point where you're going to be watching here. So we look at the NASDAQ, and what we're seeing here, as I said, we traded down yesterday, STX 12,951. The low yesterday was 12,967. So we came right into that STX and then bounced above that level. And let's see what the numbers were above here. Looks like we got toward this R2 13,870. Yeah, we got up to 13,185. It's hard. I have to go up and down from this to see the numbers. I'll have to figure out how to organize this a little better. But yeah, so we're looking at right now we should stay the same here. If you look at the 10-period moving average, it is still up at 0.28, which is trend mode. And you can see it looks like today, meaning Tuesday, will be the final day. It looks like there's some potential declines where we might roll over and test this 21-period moving average. So if anything we can pull from the NASDAQ here is that it looks like we're trying to put a little mini top in here. We're going to roll back to maybe the 21-period moving average. That all lines up. Maybe this is after even the CPI or the PPI numbers come out. There's a bit of a pullback. It looks like the 21 has some pretty good shot at holding. But if you look at all of these numbers here from the standpoint of the algos, they're suggesting that we're losing momentum, but there still should be adequate momentum for that SMA 21 to hold. So look at that as a key value. But it does look like we're going to trade back to there. And that number, like I said, right now, that number is, let me get the numbers here for you. For today, that number would be 12,860, but tomorrow we're looking at around 12,904.25, something like that. So just look for this market to trade in there. And I'm going with S2, R2 across the board here on all of these indexes. So those of you have the indicator, just use those values as a key point to trade off of. So I've been talking a fair amount about this Russell starting to set up a pretty major bottom here. So all of a sudden, we're back above the 10-period moving average. There's only been, out of the last couple weeks, 2 days that we were able to close under the 10. 2 days ago, we closed, actually 2 days we closed under the 10. The last two were rebounded back above that. I was talking about how these markets get a little bit out of balance. It wants to get up toward this 200 and the 21 period moving average. This is a daily chart here we're looking at. And so if we look at those numbers, that's 1833 and 1829. So this market wants to seek that level. So it does look like there could be some upward bias. If you look at the PPMs, they look completely different than the S&P and on the NASDAQ. In fact, they look like they don't look like, they are expanding and suggesting we're going to continue to expand, which means we're going to stay above this 10-period moving average and at least trade, as I've been telling you, between the 40 and the 21. Those values are 1771 and the 1833 level. It maybe end up to be somewhat random, but it looks like as we come into toward the end of the week, we could start to challenge the 40. Ultimately, that 200 moving average is going to come into play. The 40 is dropping every day right now, so there's some pretty decent resistance here. If we look at the PPM 3 down here, it's at a minus 1.18, which tells you there's a fair amount of resistance at that value, which right now is 33. But if we look at the slope here, we're looking at about 3 handles per day. So that'll put us down around 27, maybe 20, even a 24 handle over the next couple of days, depending on how the market trades. But it does look like we're seeing an acceleration to the upside on PPM 1 and 2, which is positive. And maybe we can start to get some positive rotation because Russell has been massively underperforming. Just as an example here is on a year-to-date basis right now, what we're looking at year-to-date, S&P's up 7%, NASDAQ up 15.5, Russell up 0.6. So it's been a big laggard, and it should, I think what we're seeing here on this chart, folks, is that it's going to start to claw back some of this underperformance here. And we'll go through the interest rates like I've been telling you, is I think everything's kind of stabilizing here. And it's interesting because there doesn't seem to be any dialogue that is willing to scare the market at any high level from that standpoint. All right, we'll look at the 10-year next. And one of my dialogues I've been talking about is that I thought we would see prices move back to 3. Here we are right at the 10 at the 340.44 level. And ultimately, I think we end up here around 350. So we've just bounced right back into there from a yield standpoint. You look at the algos, they're suggesting we're going to move up probably toward this upward sloping 200. 350 is going to act as a magnet. We should start to get above this 10-period moving average in the next, we'll say next 2 sessions, which will put us, it's still downsloping a little bit, but the pattern's starting to move up. We should see this start to turn up pretty good. I think ultimately we get sandwiched here between the 21 and 40, which just tells us that we're going to have a move up to around 362, 365, and we'll probably stay around 340 to 365. Let's go ahead and take a look at the 2-year. This is somewhat interesting. New fib targets for the 2-year. The fib targets now are, hang on, let me get this situated. Fib targets now 426, 450, 464. We do have this downward sloping 40, so I'm going to say this thing probably stalls around 334, 325, 334. This is daily. We should see the market grid turn up. All of the algos are suggesting that they're trying, not all of them, but the PPM 1 and 2 are suggesting we're going to see these things start to move higher. And the 200 is actually fairly positive, trying to turn up as well. So you can see this upward slope here of the 200. Let me blow that up. You can see these numbers. I don't think we get to these upward fibs, but I do think we get up toward this 40 period moving average, and that would put us at least up to fib 1, about 425. And that's really that consolidation range. We should start to consolidate. What we're seeing here is this volatility. If we go back and just all this bank volatility stuff that we had, everything's starting to normalize here. And maybe this has something to do with some of the numbers we're going to see here on CPI and PPI here in the next couple of days. But it does look like we should start to come back in here just a little bit. All right, so we'll look at crude next. Crude is continuing that little rollover I talked about. We got the RTX sell signal about 4 days ago. We're just staying in this little flag. We're starting to form just a little bit of a channel to the downside. The PPM 1 is up 0.90, so there's going to be only about a 20% probability for the market to decline below SMA 10. And that number right now is at 77.82. Last trade here at 79. So I was talking about this the other day. 77.75 is going to be rock solid. This little upward slope here looks like it will continue. It's starting to bleed off a little bit, but that's going to be good support. And out of a moving average like this, we can get a decent bounce and even test the 200 above. So it doesn't mean that we're just going to stay really flat here. We could see an 83, 84 handle here on crude just on a bounce up. If we get a bounce off this 10, we could get maybe a 3-4 day rally into that 200 period moving average. So that's a factor. It looks like to me will be sandwiched between the 10 and the 200, the 10 77.82, the 200 right now 83.92, and it's declining just slightly while the 10 period moving average is actually moving up pretty strongly at a 0.91. So that's a pretty robust uptrend. So there's still possibility of testing that 200, getting another move up, but I would look for the market grid to turn up on this, and then you have a chance to authenticate some kind of rally like that. So be cautious. I think there's still a bias to the upside on this crude oil. All right, next we'll cover gold. Gold continues to just climb along this 10. We got that RTX sell signal on the 4th, and now we've got 1, 2, 3. This is the 4th day down. It looks to me we're going to continue to decline toward the 21. We're trading right at the 10 period moving average right now. It's 2003, last trade 0430. We should head down toward that around 1975. I mentioned 1965. We should continue to kind of trade into this number. This is kind of a sloppy looking pattern. I'm going to go over to a weekly just real quick because that revealed some pretty interesting numbers. We look at the weekly from a market grid standpoint. I know it's small over on the right hand side, but I'll read off these numbers. Right now, S1 is 2008. We're below that. S2 is 89. S3 is 69, so around 70. I think we can come in there. We're probably going to get an inside bar this week. Last week we had a pretty decent range. We had a range of, we traded as high as 49. We had a low, this is weekly now, 1965, and now this week so far has been fairly narrow, 96.21. I don't think we make a new high. We don't make a new low. We get an inside bar, and typically that really leads us to a potential of a retest of the lows of last week, which would be a test of that 65 level. So whether we get through there or not, I'm not sure. But the one good positive thing is that the 10-week moving average is very positive. We're looking at 0.67 on PPM1, which tells you that if it spiked down to there, that would be a major buying opportunity. I don't see that happening. It looks like over the next 2 weeks, that 1966 number will come into play. We'll see some pretty good support at those levels. But I think we're sideways consolidation range on the gold. And it looks like all the play is in the next market I'll cover, which is Bitcoin. We'll stick with the weekly as we go in Bitcoin. Let me blow this up just so we can see this most recent action. It does appear that, you know, we've got that same upward slope like what we have on the E-minis on the S&P. We've got a PPM. This is a huge number, folks. 2.77. Remember, 0.25 or greater is a trend. Well, this is what 10 times that, right? So this is a huge upward slope. That's telling us that we're in an uptrend. We're trading up toward the this is weekly chart now. This is trading up toward the R2 29,485, 30,089, 30,629 is STX for this week. So we're trading up. We're still within the market grid expectation here. We have printed through the last 3 weeks high. There's definitely a big bid coming in here. We don't have any current fib targets, at least on the weekly. Let's go over to the daily to see if we got anything coming out of there. We do have, and I talked about this the other day, and I didn't think they were. I hate when I discredit some of these fib targets, but look at the fib target going back on February 7th. Fib targets were 29,865, 30,869, 31,490. You'll see these green dots here. Let me just kind of blow these up a little bit so you can see just this recent action. And you'll see here that this is the, we did get on a daily basis yesterday, we got an RTX sell. And so we could get some sideways movement. But once again, look, this is daily. Look at these angles of attack. Look at this underlying trend. And it's just right there. I mean, that is a classic trend mode. And even though we flattened out, we traded around the 10. I told you the 21 would come into play. It did, and it had a pretty substantial upside. And even now, it's bled off. It's still a 0.29 bullish. So everything is really positive here. So this would be, at least from a fib targets right now, we could see a range up to, I just said, fib target would be 30,869, 31,400, we'll call it 500. And, you know, so far we've already had 30,000 high print, and last trade right now at 29,883. So we're getting close to that 30,869. That would be fib target 2. And we can even go back to the previous targets, by the way. There was other patterns here, 30,261, 30,867. So there's a whole cluster of targets here. And this upward momentum that's here is pretty substantial, because you're looking at PPM1 is at 0.50. Like I said, 0.25 or greater is that range that we're looking at. And I don't see any, like substantial, I'm going to flip back to the weekly again. I just want to make sure that, yeah, there's no Fibonacci targets that are hanging out here right now. There was some old targets, and I don't know if these patterns will come into play or not, but they're 33,000, 38, way up here at 40,000. But I think with this trend, it looks like it's going to peak out in the next 3 to 5 days. But as we're doing that, this trend is still very valid. If I look at what the PPMs are likely to do on the weekly, this is multiple weeks, by the way. So we're looking at 3-4 weeks, and that's going to be a really substantial uptrend that's going to stay in play. That simple SMA 10 week is going to be a good play. I'm going to go back to daily. You'll also have with this 0.51 SMA 10, 21. These are solid numbers, and that angle of attack is going to be a valid trend line to follow. We should climb right along that line, and it doesn't look like this thing's going to be over anytime soon. It looks like it should still print up to at least that 30,800 plus. Okay, folks, hang with me 1 second. All right, so we got through everything. Just trying to look at some notes you have here. Yeah, you could actually break that Bitcoin down into hourly chart. If you've got the indicators, you can go in and play off of that, the hourly chart. In fact, let's go back and take a quick look at that, because this is a pretty substantial move here. Let's go back and look at that. Let's just flip to an hourly, and probably I know real popular is the 4-hour chart as well. We'll take a look. Let's just go back into this because I'm not ready. So you can see on the hourly chart, this thing was accelerating on the upside here. So this breakout, I could go back and run a script here and show you what it looked like. But you can see that angle of attack. Look at that. That's beautiful. The way this is spread, this is a really good trend. This is hourly. Let me see if I can flip this to 4 hours, because I know a lot of folks use this chart. Yeah, so 4 hours is, I haven't used this a lot with the indicators and stuff. I haven't looked at this, but you can see the angle of attack here is also just pretty substantial. You don't want to chase this thing, that's for sure. We should get some sort of pullback, but I think the hourly chart for me is going to have a little better values of what you might be able to play off. That 4 hour, you're pretty much way above the trend lines and above the moving averages, so you're probably a standard D&1/2 above that, so you want to be very careful going back in there. All right, I just had to go back to that as a second thought. Let's see here. Yeah, do remember to hit that like button. That's a good thing. Yeah, you know what I want to do here, and I haven't run this. I'm going to put it on. Let me go over here so I'm on screen differently. I can't end here tonight. I just want to see. Yeah, I just want to see, we did have a buy signal here. What is this, daily? I'm just trying to get this up here. Had a buy signal of 24,497 here. Let's flip this over to a weekly real quick. Yeah, so weekly on 20,891 was a weekly buy signal, and we've been in that since then. So that's, let me just move this up just a little bit. So you can see, yeah, this is where the buy came in on November 13th last year on a weekly, and we're still in this weekly buy, and we're seeing accelerations here, just like I was showing you on the trading view. And it's impressive, folks. It's a big rally. There's, like I said, there's no fib targets out there that we can point to and, start to anticipate much higher prices, but there are trends involved. That's my point. And so that is something to pay attention to as you go forward. I'll try one more time to end. It's interesting. Just I can't get done with Bitcoin tonight. Maybe it's appropriate. Is one of the things, Bitcoin was played out to be this alternative asset. We've seen cases where it's highly correlated to the equity markets, and then we've seen, times when it acts like an alternative asset. And it's acting like an alternative asset. I've been talking about how the gold and Bitcoin look similar. Well, Bitcoin's just taking off, and I think I saw a comment here tonight in the chat. Somebody was saying that the whole idea of Bitcoin not being relevant went out the window, and I would agree with that. I think there's, with everything that we're seeing, I think probably this BRICS story is pouring into this. We didn't talk about the BRICS. There's too deep of a conversation to have there. And in fact, the BRICS deserves like a whole live stream, and be nice to have maybe some other opinions around it, talk about it. But I think what I'm saying here is these things, it's possible that the whole BRICS scenario and all of a sudden Bitcoin's truly becoming the alternative asset here. And I haven't looked at Ether or any of the others out there. I don't think I have the ability on this platform to get it. I do on TradingView. But anyway, folks, I think that's going to complete it. Let's see how we do. And we did pretty good. A little bit less tonight than usual. Yep. I'm just looking at some comments here. Yeah, so just a real quick comment, just looking at a couple of things you folks are talking about. Just to close down tonight, I think the demise of the dollar immediately is probably not in play. It doesn't mean that the players, it's kind of interesting. It's like, I guess maybe you can, maybe there's an argument. Can you put a new currency together? Do you really want to have your financial future tied together with China? Maybe you do, maybe you don't. Depends on who you are, I guess. Being American, I'm thinking not. But, certainly the U.S. has shown some pretty aggressive stuff, like I talked about with sanctions on lots of different countries over the years. So, and we won't even, well, I'll mention it, but we won't talk about it. But at CBDC is even a scarier aspect. And a lot of folks seem to think that's coming on us pretty darn quick. That might be another thing driving the Bitcoin. So we'll see what happens here, folks. Anyway, thanks for watching. I'll be back here tomorrow night, and we'll already be getting ready for midweek. And it's going to be interesting when we get these CPI, PPI numbers. So thanks for watching. Hit the like button before you go, and subscribe. See if we can get the thing to break out over 38,000. We were stuck at, I don't know if you folks remember, we were stuck at 29,800. And I would just ask, if you have watched this video to this point, at least give me a like and comment, and that will help a lot. Thanks again. We'll see you tomorrow night.